From the News Channel 5 Network, this is MorningLine.
Good morning, everyone. Thanks for joining us on MorningLine. Nick Bears here on a Tuesday. And first thing in the morning, what am I going to hit you in the face with? Taxes. What? April's still a long time away. Taxes? Yes. But this is something, we all have to deal with. And I guess I'm learning right now, as I've been talking with my guest before the show, I guess there's ways you can start planning for it now. You know what? I'm not going to do it. I'm just going to put it off. And we'll see if that's a problem or not. But anyway, tax laws, some of the things that you may need to be aware of that have changed. It's never too early. And right now, as we come to the end of the calendar year, I think some things to talk about. So we thought now might be a good time. And we can open up the phone lines, too, because I think a lot of us maybe have some tax issues that we're not really aware of. I know many of you deal with, Social Security, Medicare, stuff like that, and how it may apply one way or the other. The number 737-7587 to get the answers, not from me, but from Dr. Friday, who always looks spectacular.
Thanks,
nice to see you. I love your hat. You're so coordinated. You look great. Even your earrings.
Thank you. See?
You're not wearing the flash drive earring today.
I'm not wearing the flash drive today.
I know you.
We've been on each other too long is the problem.
I like it. Well, nice to have you on. Thank you for coming on. When I first was thinking about it, she's coming on. I know we always see you in the spring or, April, but why now?
Well, mainly because it's really a good idea to think about planning your taxes today, because with the tax laws not getting the extenders, or we're not sure what's going to get extended, you might need to pack a little money aside. If you normally are at the break even, or you owe a few dollars, you might owe a few more dollars, because some of the things you're used to, sales tax, college educational credits, higher educational credits, that could be $2,000 or $4,000, and that's a credit. That's a dollar for dollar deduction.
That's not been renewed.
That has not been renewed right now.
Okay.
Energy credits and some of the others.
But every year they do, don't they?
Well, yeah, but can we always really? Can we expect the government
Congress?
to always do what we want them to do? No, we can't.
Okay.
So we have to prepare for the worst. And then what's the worst you have is a little money in the savings account that you didn't have to use. Because what you don't want is to owe the IRS, because then you're looking at basically 25% in penalties and interest on the money that you don't owe, and that can actually double and quadruple at some point within a year or so. You could owe them 100% of what you owed them.
Okay.
So that could be a lot of money.
Okay, that makes sense. Now, we're talking about these rules or these deductions that may be renewed.
Maybe.
Okay, and that they've been in place for a while. So aside from those, and we can get into some of those details if we want, if some callers have questions there, what about anything new to the tax code? I mean, some years I know you get that big stack and you have to throw it on top and you go through this. Is there anything that's really been passed that's changed, that's new, that we have to worry about compared to last year?
Well, no, but the health insurance penalty has increased again from 1% to 2%.
All right.
So if your income and it went from like a $95 minimum to $395 minimum penalty. So that's been a big jump on a lot of people. A lot of people that paid last year didn't realize that the penalty was going to be as high. Many people came to my office and said, wait, I've got a bill for $1,500. I thought it was only have a $95 penalty or whatever the difference numbers in. And so remember, it's 2% of your adjusted gross income or the minimum, whichever is higher. So many people got hit with that higher, the 2% of their adjusted gross. So that's just, that's going up, and it will go up again next year.
All right. Yeah, I want to go into some general things here first before we get into more of those specifics. What, in your mind, as people sit out here watching right now, is the single biggest mistake people sometimes make doing their taxes? And there may be more than one, but what do you come across?
Yeah. Basically using the wrong name, and I don't mean the wrong name. Believe it or not, people get married, but they don't change their Social Security card. Children come from other countries or whatever. Make sure whatever you put on your tax return matches your Social Security card. So if you get married and you didn't change your name, you need to make sure you're using your maiden name or
if there's a difference there and you send it in, what happens?
It gets rejected, or that gets put aside, and then you end up with more penalties and interest, or you've lost your refund because you don't know what happened. The government's trying to search it. You cannot e-file it if it's incorrect. They will reject it.
Right.
And if you have someone doing it, they may not notice it's been rejected. So make sure, especially if you have a unique name or a unique spelling, make sure that is correct on the tax return. Social Security numbers being wrong is another thing. Children's dates of birth being put incorrectly on. So things that you would kind of think are really simple is probably the number one mistake.
Okay, and that's good. And the bottom line on that too, clearly if that happens, it's an innocent mistake, but the IRS will not cut you slack on that. It's not like, oh, well, she put down the wrong name. Yeah, okay, it's going to be a little late now. That's okay. We understand you didn't mean to do.
Yeah,
That's the thing you have to understand. With the IRS,
Failure
that
to
might be
file,
something
failure
when
to
you're
pay.
working with your local bank or your colleagues. Yeah, they cut you slack.
Yeah.
IRS, nope.
Right. So if you are one of those people
Rules are
that wait
rules.
to the last deadline, file it,
right.
find out that it didn't get put through, now you're going to get hit with failure to file on time, failure to pay on time penalties, which again is an additional 12, 15, 25% penalties depending on what they are.
Now that's a great point. So a lot of times, especially if you're someone who suspects you're going to have to pay something, you wait till the last second.
Castigators.
So you do wait, and I understand. Now others don't. A lot of people file very early, and we can talk about the returns and such. But I mean, if you do wait till the last moment, I understand you don't want to give them money until you have to. But if you make a mistake, you have no room for slack.
Well, two things. One, you bring up a good point. By extending it till the October 15th deadline, remember that the penalties have started since April 15th.
Well, what do you mean extending? I wasn't even talking about extending. I'm saying just putting it off till April 15th.
Well, then if you're self-employed, your payment was due January 15th.
Oh.
So, because you should have paid quarterly,
That's right.
So as long as you paid in 100% of the year before, there's going to be no penalty in on that. So, or 110% in some cases. So as long as you're paying it in on time and quarterly for equal payments, you're fine. You wait till April 15th, you write that final check. But again, if for some reason it's delayed and you did electronic withdrawal on that e-file and it's delayed, boom, now your tax return is not only late for failure to file late, now you got failure to file on time penalties. So so you've got all kinds of penalties. Again, now you may be able to prove you tried to e-file it, you got rejected. There is some little, if it's within a few days, you can usually get that waived because the fact that you prove that you did actually submit it on time.
Yeah, and there's a snafu
and then there's
there. That's maybe one of the few exceptions.
Exactly. And then a lot of times people forget to file extensions and then they go to October 15th and they either don't pay or whatever. So you've got not only the failure to file but failure to pay and all kinds of other penalties which will not be waived easily.
I don't know how many people wait till the last moment. I'm sure there are plenty. Okay, but on the other hand, there's a lot of people that like to jump as quickly as they can on their returns.
Yeah, I don't have a lot of those.
Oh, right, yeah, all right, yeah. But the folks, what's the earliest you can get a return? When can you start, filing?
Last year,
we don't get our W-2s till when? Or
well,
W-4s,
theoretically, yeah, you're right, on W-2s.
Okay.
Usually a lot of people will start getting them the first or second week of January.
That's what I thought.
You usually, last year, I don't believe they were processing until like the 20th of January. We're told it's going to be a big delay this year too, because again, the reason for these delays is not for the IRS. What happens is they don't pass these extenders until the very end of the year, which means the tax programs, none of them have time to get the forms put together. The IRS has to put the form together. They have to submit it to the programs. Programs have to get it approved, whatever. It's a very long process. So, these people are having to extend the time to be able to get, and a lot of my clients, we've had to wait till March because it's taken them that long to get all the forms approved for sole proprietorships and people like that. So if you do a simple 1040, a lot of times you can get those done relatively quickly. But
which means you could have a return check in your hand by sometime in February?
Yes. Usually about, they say 21 days, but usually 7 to 10 days after you file.
It's interesting to me, the concept still is out there among people that get returns, that it's a great thing where they look forward to having this little windfall that comes in February that helps pay off perhaps their holiday spending. But in your opinion, I know, the perfect tax form return is when the time comes, you owe nothing, you get nothing back. Meaning for the whole year. Now, I don't know if it's ever perfect like that.
Within $500. I'm
That's great,
comfortable.
because otherwise, if you're getting that return at the end, that means that was money you could have had during the regular year, and they were basically getting to spend it, and then you get it all.
Well, think about it. So you paid off the credit cards at the end of the year, but were you building up any kind of interest throughout the year at 12 or 14%, right?
Right.
So yes, you got several thousand of your own hard-earned money back. The government's very nice to give you your money back without any interest that you just paid off a credit card that you paid interest all through the year on, right?
So no interest is the key.
So the only time that it's actually, you don't have a control of that is if you apply for earned income credit, if you have child credit, if you have, and you're getting that money back due to some credits that happen throughout the year, then you really can't control it. But if it's your own money and I have some people that get $9,000 and $10,000, they like to get that kind of money back. It's a savings. A savings with 0% interest. Not my opinion the best. I know we're not making much at the bank.
I know, but it's in their mindset. They're thinking, oh, I'm getting this little windfall at the end, and it's like, if I had had it during the regular year, I would have spent it anyway, and here I get this.
There's their theory.
It's just the thinking about that. What's the closest? You said if you're under 500, that's pretty solid. What's the? Is it to the point where you've seen somewhere where either someone gets $1 or they have to pay $1?
Yeah, I have it. And
for real?
Just so you know,
I wonder if you've been.
If they get it out, not my own taxes. Never been that close. But on some of my clients we had, and they will not refund you your $1.
They won't.
They will not refund you your
Because
dollar.
the cost of postage isn't even worth it.
Well, the funny thing is they will bill you for a dollar.
They will bill you, but they won't.
They will not refund
what about
you a dollar.
$1.50?
$5 or
Five
less.
is the okay. So if you're within $5, you're not going. The government keeps it.
Exactly. So you want to be on the other side, but then they will send you. I've had someone billed for a dollar. It was like 98 cents. When you think about the cost of producing, sending, and mailing, that cost them more than it was for that person to turn around, write a check, and then have to pay it to go back.
That's interesting. If you blow that off,
it'll grow.
I know. If you blow that off, is that the same sin as if you're blowing off a $10,000 bill that you owe the IRS? Do they look at it the same way?
Yeah, they really do. I mean, they will continue to fester and pay and do this.
He still owes us $1.50, and it's grown. It's $1.75
I've even had the Tennessee
now.
Department of Revenue do that. 38 cents on this one you owe me, 97 cents on this one. They won't send bills out. The state's a little smarter.
Right.
But when something comes with a tax clearance letter or something, you may have to send a couple dollars to the state to zero out the accounts.
Has the law changed at all for people? And I guess it had. If you're ordering something online.
Oh, yeah.
Okay, now how does that work now? If I go on Amazon and order something out of state and it's delivered to me, then I have not paid a state sales tax. Is that right?
That is correct.
And so am I supposed to make good on that?
Absolutely. It's called a use tax.
That's right. And I know
we've talked
before,
a few times. And we actually have the link on my website because a lot of people do not realize as Tennesseans, we are supposed to pay that. There's a form once a year you're supposed to submit. How much did you buy out of state? How much is it paying and whatever? And the state has a very difficult now. Amazon and some of them, because they have centers here, now are collecting that sales tax anytime they do it. But there's a lot of places on the net you can buy out of state.
Sure.
Or if you actually drive to Kentucky and maybe have a tax clearance or whatever, when you come back into the state, you're supposed to declare that, right? Or you buy a car there and you say, I'm buying it from out of state. When you come here, you're supposed to pay the tax to the state in which you drive back into.
I understand that's the law and you want to abide by it, but I've got to figure the vast majority of people, maybe not intentionally, you just don't think about it, and so they don't pay it. Do most people pay it or not?
No, it's ignorance. And in many states, when we do other state income taxes, it's actually on their state income tax form where you would declare how much use tax you actually have.
But since we don't
have an actual income tax,
so how can the state enforce that?
They don't, and I've never yet seen where it's enforced. It's enforced to businesses because they have the ability through sales tax accounts and everything else, but I've never seen it enforced to an individual at this point. But they would have the ability, if for some reason they wanted to, it would be an interesting challenge.
Absolutely, and I would guess if they did, what we're talking about being lost here, millions of dollars.
Oh, absolutely.
Well, think about how many Tennesseans order things online and it's delivered here. I mean, and again, I'm guilty of it. I'm gonna come clean right now. I'm pretty sure I ordered a pair of gym shoes some point and did not do that.
Well,
I don't do much online.
Retail
but when I do,
accountability, which is something the Tennessee Department of Revenue had started through businesses. But what's going to be amazing is at some point it may be trackable through some other format, telephone numbers, whatever, shipping addresses, where the state will be able to, because they're going to make the vendors accountable, all the larger vendors at least, accountable, and then you will get a bill from state of Tennessee possibly saying you bought these products, here's your sales tax bill. In the future, it could actually happen.
And you would
They're
think
very
they
good at
might
it.
take the steps to do that if it's going to garner them all these millions of dollars that are being lost right now.
Retail accountability has raised millions for the state. It's been a great way to get business owners to be more accountable for how much their sales tax really should be based on how much you're buying in cost of goods.
Gotcha. All right, listen, let's take a break, shall we? When we come back, the number's open, 737-7587. I've got a lot of questions for her. Clearly, she can talk. Okay. But we will make time for you if you want to jump in. If you have a question, I know it's not till April, you got to pay. But we're going to cover more of what you need to know about your taxes, and any questions or comments you may have, give us a call. We'll be back right after this. Stay with us.